Hello, welcome to this course on management accounting. Today we will discuss flexible budget. A flexible budget is also known by other names such as variable budget, dynamic budget, sliding scale budget, step budget, expenses formula budget, and expenses control budget. It takes into consideration both fixed and manufacturing costs. It is designed to change in accordance with the level of activity actually attained. It often shows the budgeted expenses against each item of cost corresponding to the different level of activity. Flexible budgets are prepared where the level of activity changes and cannot be estimated with accuracy at the time of preparation of budget. A flexible budget recognizes the difference between semi-fixed, fixed, variable cost and is designed to change in relation to change in level of activity. The underlying principle of a flexible budget is that every business is dynamic, ever changing, and never static. Next, we will see the definition of a flexible budget. The Chartered Institute of Management Accountants UK defines a flexible budget as a budget by recognizing the difference between fixed, semi-fixed, and variable cost is designed to change in relation to the level of activity attained. A flexible budget provides information to managers for multiple levels of output in case of output is different from the expected level. The performance reports at the end of the ACE period are compared with the budget based on actual output attained during the period. It has the following important features. It covers a range of activity, which means the output. It is flexible, that is easy to change with the variation in production levels. It facilitates performance measurement and evaluation. A flexible budget is automatically tailored to any level of activity. In general, it has the following important advantages: accurate budgeting, accurate performance measurement, coordination of activities, control tool for the activities undertaken. Now we'll discuss it with an example. So here is a problem. Draw up a flexible budget for overhead expenses on the basis of the following data and determine the overhead rates at 70%, 80% and 90% planned capacity. The expenses are given under various heads: variable overheads, semi-variable overheads, fixed overheads, and the total overheads amount to Rs 62,000. The estimated labor hours 1,24,000 hours. Now we will draw up the table for working out the solution. So we will write all the items given in the problem, and one item is that semi-variable overheads, so which includes a fixed portion and a variable portion. So now we have to identify the fixed portion and the variable portion. Regarding power, it is claimed that 30% is fixed and obviously the remaining 70% will be variable. So we have provided the column for calculation. Next, repairs and maintenance. It is said that 60% is fixed. So obviously remaining 40% will be variable and provision has been made for calculation. Now we will move to the calculation side. First, what are all the given items? So what we do is we plot it here in the table at 80% capacity, which is given in the problem. And one thing we need to do is that we need to calculate the semi-variable overheads and identify the fixed portion and the variable portion. As said, fixed portion occupies 30%. Since the amount of power is 20,000, what we do is we take the 30% as fixed portion and arrive it at 6,000 rupees, and the remaining 14,000 goes to variable portion. Similarly, for repairs and maintenance, the total amount spent is 2,000, of which fixed portion is 60% and the variable portion is 40%, and the calculation has been made, and 1,200 and 800 has been arrived as fixed and variable portion, and whatever is given in the fixed overhead has been written here. Now we'll proceed to the next stage. Obviously it is the easiest part, where we have to fill up the fixed portion for 70% and 90%. Since fixed cost does not vary with the level of activity, it remains the same. So what we do is we just write the same amount in the 70% column and the 90% column as that of 80% column. Now we will move to the calculation of the remaining items. We move to variable overhead, and we know that at 80% capacity we spend 12,000 for indirect labor. So what will be the amount for 70% capacity, for which we will use the calculation 12,000 divided by 80% multiplied by 70%, which will give you 10,500. Similarly, for 90% capacity you have to use 12,000 divided by 80% into 90%, which will result in 13,500. And we will move to indirect material. So at 80% capacity we spend amount of 4,000. At 70% we calculate it as 4,000 divided by 80% into 70%, which amounts to 3,500. Likewise, we make calculation for 90% and arrive at an amount of 4,500. Now we will move to the semi-variable portion. Since 6,000 is fixed, so it has to remain constant at any level of activity. So we write the same 6,000 for 70% capacity and 90% capacity regarding power. Now we will concentrate on the variable portion. If we spend 14,000 for 80%, then for 70% by calculating it, it arrives at 12,250. Similarly, for 90%, it is at rupees 15,750. Now we will move to repairs and maintenance. Since the fixed portion does not changes, the 1,200 will be recorded on 70% and 90% column. Now we will move to the variable portion of repairs and maintenance. If 80% we spend 800 rupees, then for 70% we calculate it to be 700, which is 800 divided by 80% into 70%, which will result at 700. And for 90% it amounts to 900 rupees. Next, after filling up all the columns, now we will total up the 70% column. So it sums up to 58,150, and the 90% column sums up to 65,850. Now we have to find out the estimated labor hour rate. At 80%, the labor hour rate is 1,24,000 hours. Then for 70%, it will be 1,08,500 hours. That is 1,24,000 divided by 80% into 70%. Likewise, we calculate the amount for 90% also. It results in 1,39,500. Now we will calculate the overhead rate. For 80%, we spend 62,000 as our total overheads, and the estimated labor hour is 1,24,000. So then 62,000 divided by 1,24,000 will result in 0.5, that is 50 paise or 0.5 rupee 0.5. Similarly, if we calculate it for 70%, 58,150 divided by 1,08,500, it results in 0.53, that is 53 paise. And for 90%, 65,850 divided by 1,39,500, which results in 0.47, 47 paise. So this is how we calculate the overhead rate and flexible budget at different capacity levels or activity levels. Hope you have understood what we have discussed. Thank you for your patient listening. Thank you.